Let's bring in Jeremy Siegel, Professor Emeritus of Finance at University of Pennsylvania's Wharton School of Business and Chief Economist at WisdomTree. I think Jeremy, Professor, your ship's coming in. The economy has been weaker than people thought, I think.
Yeah. And first of all, I'm not going to let the BLS off the hook. I mean, you talk about how to fix it. Make these questionnaires mandatory and give them a time limit to fill it out. I think the response rate's down to 60%. I mean, that's unacceptable for the most important statistic that we have. It's almost like we're sending them out, fill it out when you can. We know you like to go to the beach in the summer, so it might be a little bit late. This is just not acceptable today. We need that response rate has to go up. And when you make the biggest mistake in 50 years, why? Why wasn't there an explanation? I mean, who's reporting wrong and why? And, there was no, transparency there. And I'm not going to try to justify the firing or not. But, in this world of the internet and instantaneous response, this idea of reports coming in weeks late, I think is just totally unacceptable. And it changed monetary policy. I mean, I definitely think there would have been a rate cut at the July meeting had we known the numbers were as weak as it was. And, I think, I know one of your past, we're talking about inversion of the term structure. I measure from Fed funds to the 10-year, and it's inverted. And normally the Fed funds is 120 basis points below the 10-year, and that definitely argues for lower than 4.33%. So they need to move on this.
That's interesting. So I'm wondering whether you can ever expect a sort of a government-run entity to get it together, or you couldn't do this. I mean, we do have some private data from ADP. Is it possible to fix this? And you're absolutely right. If Jay Powell and the rest of the Fed are banking on the current numbers that they get, and then they can be off by that much, monetary policy is hard enough with the right numbers. If you got the wrong numbers, you don't have. Maybe actually, if you got the wrong numbers, maybe it'd be better. I don't know. Maybe they end up doing the right thing.
And by the way, I think Loretta Mester, mentioned the JOLTS report. I think the JOLTS report response is down to 20%. It's less than half the pre-COVID. Listen, COVID is over. We can't keep on using COVID, as a excuse for not getting the data. This is just critically important. And why wasn't there a big conversation? We're not getting the data, or when we get the data, it's wrong. And why is it wrong? And why aren't we mandating time limits for returning these questionnaires? I mean, a 60% response rate, they send it out to, I think, 400,000 firms. This is not individuals. This is firms that have the ability with the internet to get that information back. I don't understand it. And so, listen, I don't think it was political at all, but I'm not going to let the BLS off the hook. Over the last 2 years, they should have been working on this problem.
Well, okay, so in the meantime, since Liberation Day, we've recovered all those gains, set a series of new highs. We had some weakness last week, but okay, so now we have the specter of really maybe a weakening labor market. Yeah. Maybe you have that offset by the possibility of some rate cuts back on the table, more than people thought. But you also have, we just had a report on the tariffs and the effect on Christmas. So you've got valuations that are probably pretty high again. So, yeah. I mean, what do you do with the stock market here? Are you back thinking maybe we're ready for another pause? What's up, Andy? You got some?
Well, I think the bull trend is still on. I think we are waiting. I mean, as a last message about the tariffs, maybe I think the effect's going to hit before Christmas. I think we're going to begin to see that. But don't forget, I mean, most economists think it's going to be maybe 1.5% of GDP. First half of this year we had 1.2, and the year before we had almost 2.5. So we're already kind of seeing that effect. The question is, can AI power us through that effect? I think that's the hope of the market. Can we raise productivity enough through AI to offset the one-time drag, and it is a one-time drag of the tariffs? And don't forget, we haven't seen any retaliation so far. That is a positive. We did with China right away, with the first of all, the rates and then the rare earth. But on the others, we haven't seen that retaliation. So it is not as serious as we feared at first, but doesn't mean it's not going to have any effect. The question is, can we raise that productivity enough through AI? And I think the market says, yes, we can. There's enough slack in corporations to take up a lot of the loss that we might experience through the tariff tax. And I think that could still argue for an upward tilt to the end of the year. What I want to see is ordinary firms beginning to use AI to bring that productivity to the fore.
Professor, I just want to go back to one thing you said, which is, and I don't disagree with you, I agree that we need to make the BLS better at capturing the numbers more quickly, getting better information in, and I don't know about the models themselves. But I would just suggest to you that has been almost an ex post facto rationale, because the original rationale that we heard on Friday from the president was that he said the numbers were rigged. They were rigged. They were rigged against him. That's what he said, factually, empirically.
I'm not supporting that, Andrew. I absolutely do not think they were rigged. I mean, I think that is a wrong statement, but an incorrect statement. That does not absolve the BLS for not trying to get better data over the last 2 years and not explaining the big mistakes of this month.